Yo, what's up you guys, welcome back to another video, and today we're gonna do another weekly market breakdown. Obviously those who had asked me to do the breakdown, I'm just gonna take a look at those pairs there as well. We're also gonna go through most of the feedback that I received yesterday based off the way that about the course that I did in terms of passing accounts. I got some very good feedback. Some people, said, they wouldn't do it. Some said they would do it. But we're going to go through all of that information and then do the breakdown for you guys there as well. Also, if we can get this video to 100 likes, what I'll do is I'll get the course for you guys. You can do it yourself. You can go through it yourself and you can then decide whether you would want to go down that route. I basically gave you a quick explanation. The actual course is actually an hour long. Let's get this video to 100 likes and I will drop a link to the video for you guys there as well. Now, without any further ado, let's jump straight into the information. First things first, right? So we're going to go through feedback very quickly, right? Thanks, boss. You're welcome, Mr. Busido. My man Altris just said, thank you, Star. In regards to the last part about the funding accounts, I think it's smart but not smart at the same time, because if a person doesn't go through the process of passing honestly, then they will fumble after passing anyway, because it's unlike they will trade past the account. Exactly. So they wouldn't have learned anything about the obstacles that one potentially need to go through from an emotional or from a from a technical, from an emotional perspective, from a planning perspective there as well. So very good point there. Candlestick Junkie, thank you for the UK 100 analysis. No problem on that. Who's Pegasus is actually a company on GTA Online that sells expensive aircrafts and boats. He's saying as long as there's gold in USDX, I'm not complaining. That's good. Mr. Nay over here say that the method can be used to pass the challenge and get funded by one of the prop firms. But what happens after you passing the challenge is one thing. Making money from the market on a consistent basis over a period is a total different game. And that is a very good point. There's no point in you passing the account because you cannot apply that same method trading a live market also as well. So that's a good point. Mr. Motang is asking for GU and AU. Let's quickly take a look at GU and AU. So obviously this breakdown, if you missed it yesterday, we're expecting a bearish correction on the DXY. So obviously expecting some bullish momentum on AU and GU as well. But let's go to GBP USD. This is all basically from a technical perspective. Now if we go down on the weekly time frame, what do we have over here? Now basically what we have here is, firstly, if you look left, you can see that the GBP USD is currently testing some very strong structure. Okay, this level over here acted as a level of resistance. The market broke above resistance, tested it as support with that wick candle there, then broke below support, came back, tested it with resistance, broke above resistance, tested it as support, broke above support and broke above resistance and is back to test it as support once again. Now we also have this market that had broken above this level of resistance here as well. We also expect that bullish correction, short-term bullish correction, before a potential continuation to the upside. Now also from a bullish market, okay, because we are trading below bullish structure, we are currently sitting in bearish structure, in bearish territory. So we definitely expect the market to give us a short-term correction and then a continuation to the downside. Now if you go down on the daily time frame, sorry about that. Now what we can see over here is the market printed an impulse. So after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high of the first red candle to the low of the last red candle, and you can see we do have the confluence of the 61.8 that's lining up perfectly with the structural level that we have over here. Now you might argue that we do have structure here, but only because DXY is due for a correction do I expect the market to continue higher. One thing to keep in mind though, guys, is today is Memorial Day in the for the US, so liquidity is quite low because there's not a lot of money in the market because all these investors are currently on holiday as well. The next one that you asked over there was AUD USD, also bullish correction expected. So this is exactly what we got based on the last breakdown that I did on this. Basically what we had over here was a market that was stuck inside of this consolidation. Now you have to be very careful with this, and the reason why I say so, that the most obvious thing for this market to do is obviously to hit that level and continue lower, because that's what retail traders tend to think. again, we do expect a bullish correction, a bearish correction on the index. So I do expect this market to continue higher. Doing this, it will take out the sellers, in the retail sellers and retail buyers as well. So I do expect a deeper correction to that level, and then from there we can obviously monitor the price action once again from there as well. Those were the only two pairs that were requested there from this gentleman. Mr. Christian Musician is saying, how is it 100% pass rate if you only win on one account and lose the other? Again, if I show you the website, right, you will see on the website it says there, you are guaranteed to pass the account. That's it. It says there, guaranteed to pass the account. But the point that you're making is 100% valid. You are saying that 50% of your investment is completely gone. That's because you have basically split your investment. You have bought 100k, another 100k, 150k, now 50k. You're losing the one for the other one. Now, on the website, it also says that, and once you guys get access to the video that I will share with you guys, because I like to share everything with you guys, you will see there, he also says that with the account that you have almost failed or that's in drawdown, you can use it to pass his, you can get the account back by using his signals, which beg the question of why don't you just let me pass both accounts, then using your signals there as well. Mr. Ghost 147 Full says, yeah, I think strategically it's gambling. Long term, I don't think it's sustainable because after passing one account, assuming you have a minimal experience in the market, how do you then move forward with your funded account? Exactly. That makes 100% sense. This was the one that stood out to me. It says, what about phase 2? Because where are you going to get enough leverage if you failed? Well, if you passed phase 1. But again, it's all about probabilities, because you might be in a situation where you've got enough leverage to still gamble the last 4% of your account. Because remember, your overall exposure on a funded account is 12%. So you would be able to risk 8% because you need to hit the multiplier of 4% to hit the phase 1 target of 8%. So he maybe thinks that you'll get to that level there as well. Here we go. Mr. Bosido, once again, Artisan say thank you. Honestly, I'd be uncomfortable 100%. That strategy could possibly work to pause one challenge, not so much on phase 2. Just prove that point there once again. And here we got okay. Let me just close this over here. Here it says the guy basically said, I don't like taking losses. I'd rather spend double the loss. One account, 100%. You just want to make sure that he actually gets to win. So I wouldn't pay a cent for that. Exactly. You don't have to pay a cent for that. I already paid for it. As soon as this video reaches 100 likes, I will make sure to drop it in the video that we make after there. Little T saying this man's a goat. Thank you, sir. FBK Pure Game. Nah, but I'll not subscribe to the second account. Mythology. That's a good way. So how can I say it's 100% pass rate if you fails one account and pass to the other? And there's definitely desperate people that's going to buy into it. People just join the link and provide it and get funded. And then we also got another one here, GBP JPY, that we're going to take a look at. But guys, thank you so much for the feedback. I really appreciate it, and I would love for you guys to get that video as well. Let's get this video to 100 likes, and I will make sure that you guys get that content there as well. Let's go to GBP JPY for Mr. Brandon there as well. I was going to go to Brandon now, but let's go to GBP JPY very quickly. This was the last trade that we actually took that. There's a 1 to 2 that hit take profit there as well. Now, GBP JPY, let's go to the weekly time frame, right? Let's get a bit of a overall. Yeah, so definitely correction expected. Firstly, but I can see it's quite obvious the market had broken above this level of resistance. We also expect the market to pull back as support. With a weaker dollar, we obviously expect the Japan yen to increase in value for the short term. Now we also have this impulse, often impulse. You expect a correction, and if you take your Fibonacci from the low to the high, you can see we do have a 50% confluence lining up perfectly with that previous level of resistance that is now acting as a level of support. And if you drop down on the daily time frame, probably just more candles. Yeah, on the daily time frame, what we have over here, it's a clear overextended W formation, right? After an overextended W formation, you normally expect a pullback to the left leg. Now, this was also just a break of structure, so I do expect the market to pull back to that level, obviously giving us the confluence of the DXY correcting, and then obviously the Japan yen also just giving us a slight correction there as well. What am I looking for? I'm looking for the line chart over here, just so that we can get the exact location of where this candle closed. And we go back to candlesticks. There we go. So this is basically where do we expect the market to pull back to, and then from there we can obviously once again look for another move. Now remember one thing, Mr. Brandon over here, just remember one thing also, that we do have daily structure over here, right? So I would say just be careful as soon as the market hits that level. From there you would potentially maybe want to monitor before you get to that level, because you can see we had a lot of liquidity wicks in the market as well. These liquidity wicks was basically of retail traders who came in there, who bought and had that stop losses below that level, and the market took it every time and then jump up and then move to the upside there as well. Guys, that is it from my side. Thank you for your time. Hope you guys enjoyed the video. Thank you for the feedback, and as always, cheers for years. That's all I'm gonna say. I'm gonna say cheers for just cheers for years, and enjoy the week further.